Israel has launched a series of retaliatory missile strikes against targets inside Iran, hours after Tehran conducted its own substantial barrage of missiles against Israeli territory. The escalation marks a significant and dangerous turn in regional hostilities, following weeks of heightened tensions and faltering peace talks. Iranian state media reported strikes on several military installations and a nuclear facility, though details remain unconfirmed. This followed Iran's earlier missile launches, which officials stated were in response to a previous attack on Tehran on February 28, where Supreme Leader Ayatollah Ali Khamenei was killed in alleged US and Israeli strikes. Former US President Donald Trump commented that Israeli Prime Minister Netanyahu would have no choice but to accept a deal with Iran, despite his appeal for de-escalation. The international community is now bracing for potential further retaliation, with fears growing over the prospect of a wider conflict engulfing the Middle East. A powerful magnitude 7.8 earthquake has struck the southern Philippines, claiming at least 15 lives and injuring 129 others, according to local officials. The tremor, which hit late yesterday evening, caused widespread damage, toppling several buildings and triggering initial tsunami warnings for coastal areas, though these were later cancelled for distant regions like Hawaii. Rescue operations are now intensely underway across affected provinces, with emergency services struggling to reach remote communities. The Philippine archipelago lies within the seismically active Pacific Ring of Fire, making it highly susceptible to such powerful seismic events. Authorities have warned that the death toll could rise as responders continue to search through collapsed structures and debris. The immediate priority remains humanitarian aid and medical assistance for the hundreds displaced by this devastating natural disaster. Iranian citizens are reportedly sinking into widespread despair, grappling with the profound human cost of ongoing regional conflicts and crippling domestic economic pressures. The nation has recently seen renewed missile exchanges with Israel, exacerbating an already tense geopolitical climate, while the memory of Supreme Leader Ayatollah Ali Khamenei's death in US and Israeli strikes on February 28 remains raw. Concurrently, Iranians are battling skyrocketing inflation, with the cost of essential goods rising dramatically, eroding purchasing power and quality of life. Despite these hardships, state-organized pro-government rallies in Tehran have drawn crowds, showcasing a complex mix of national unity and deep internal divisions within the populace. The combination of external military pressures and severe economic hardship is creating a challenging and uncertain future for ordinary Iranians. Peru has concluded its presidential election runoff, with voters heading to the polls to decide between two candidates in a tightly contested race. The election pits leftist candidate Sanchez, who gained significant traction in recent polls, against a former First Lady making her fourth attempt at the presidency. The runoff follows a deeply fractured initial vote, reflecting widespread public concern over persistent insecurity and political instability across the South American nation. With preliminary results indicating a neck-and-neck contest, the final outcome could remain uncertain for several days. This crucial election will determine the country's leadership amidst a period of economic challenges and social unrest. The victor faces the daunting task of uniting a divided nation and addressing its pressing issues. Pope Leo XIV captivated an estimated 1 million people who thronged the streets of Madrid to witness his flower-carpeted procession and attend an open-air mass yesterday. The pontiff's visit to Spain, now on its second day, has been met with overwhelming public enthusiasm and devotion. During his itinerary, Pope Leo XIV met with Spanish actor Antonio Banderas and observed a traditional flamenco performance, blending cultural engagement with his spiritual mission. In his address during the Mass, the Pope urged the faithful to reflect on what legacy are we leaving for the future, a poignant message resonating with the large crowd. This historic papal visit underscores the enduring influence of the Catholic Church and provides a moment of spiritual reflection for millions across Spain and beyond. Controversial remarks made by U.S. Defense Chief Pete Hegseth during a D-Day commemoration in France have drawn sharp condemnation from a House Republican and residents of a French village. Hegseth used his speech to criticize Europe's migration policies, controversially describing the influx of migrants as an invasion. An unnamed House Republican swiftly denounced Hegseth's comments as inappropriate and grotesque stupidity, highlighting the political insensitivity of politicizing such a solemn historical event. Furthermore, residents of the French village where the D-Day ceremony took place publicly declared Hegseth unwelcome in their community. The incident has sparked a wider debate about the appropriate tone and content for commemorating historical events, particularly those with international significance, and risks straining diplomatic relations. As the year 2026 unfolds, financial markets are closely scrutinizing the policies and rhetoric emanating from the Trump administration, which continues to be a primary driver of investor sentiment. Analysts point to the administration's continued emphasis on deregulation across key industries and the potential for new tax cut proposals as significant factors bolstering corporate profits. However, ongoing trade disputes with major economic partners introduce an element of volatility, creating uncertainty for multinational corporations. Geopolitical tensions, particularly in the Middle East, also cast a shadow, influencing oil prices and defense sector performance. Investors are navigating a complex landscape where presidential directives can swiftly reshape market expectations and asset valuations. The administration's approach to fiscal policy and international trade remains central to market performance throughout the year. Global financial markets are currently navigating a period of heightened volatility, marked by persistent inflation concerns and the ongoing impact of central bank interest rate adjustments. Major stock indices across North America, Europe, and Asia have experienced fluctuating performance, with investors reacting cautiously to economic data releases. The technology sector, which saw substantial growth in previous years, is now facing increased scrutiny as higher borrowing costs impact valuations. Analysts from Britannica Money's Economic Research Division highlight the delicate balance central banks must strike between curbing inflation and avoiding a recession. This complex environment demands careful consideration from investors, who are constantly recalibrating their portfolios in response to evolving economic signals. The current market dynamics reflect a global economy still grappling with the aftershocks of multiple recent crises. The escalating global government debt is increasingly becoming a significant concern for financial markets, with economists warning of its potential long-term consequences. Recent reports indicate that public debt worldwide has reached unprecedented levels, often exceeding 100% of GDP in many developed nations, fueled by pandemic-era spending and demographic pressures. This surge in borrowing is leading to higher interest rates for governments, increasing the cost of servicing debt and potentially crowding out private investment. Fiscal unsustainability could trigger downgrades by rating agencies, further exacerbating borrowing costs and unsettling bond markets. Central banks and finance ministries are under pressure to devise credible strategies for fiscal consolidation to prevent a future debt crisis. The trajectory of government debt will be a critical determinant of financial stability in the coming years. Global financial markets plunged today, reaching a new low for 2026, as surging oil prices reignited fears of inflation and economic slowdown. The Dow Jones Industrial Average fell by over 600 points, with similar declines seen across European and Asian indices. Brent crude oil prices soared above $120 a barrel, propelled by fresh supply disruptions in the Middle East and robust demand from rapidly growing economies. This significant rise in energy costs immediately impacts corporate profits and consumer spending, fueling concerns about stagflation. Central banks are now under renewed pressure to address inflationary pressures without stifling economic growth. The confluence of high energy costs and market instability presents a formidable challenge to global economic recovery and investor confidence. Despite persistent economic uncertainty, financial analysts are identifying promising investment opportunities within the robust U.S. economy and its diverse financial markets. While inflation and interest rate hikes continue to present challenges, sectors such as renewable energy, advanced technology, and healthcare are demonstrating remarkable resilience and growth potential. Strong corporate balance sheets and ongoing innovation are providing a solid foundation for targeted investments, according to recent market assessments. Investors are being advised to adopt strategic approaches, focusing on companies with sustainable business models and strong cash flows that can weather potential economic headwinds. This nuanced outlook suggests that discerning investors can still find pathways to growth amidst a complex and evolving economic landscape. Emerging economies globally are demonstrating remarkable resilience, having successfully navigated 3 significant global shocks in recent years. These nations have withstood the severe economic impact of the COVID-19 pandemic, the subsequent surge in global inflation, and the volatility induced by major commodity price fluctuations. Many emerging markets have implemented prudent fiscal policies, diversified their economies, and strengthened their financial systems, allowing them to absorb external shocks more effectively than in previous decades. This newfound stability is attracting renewed interest from international investors, eager to capitalize on robust GDP growth and improving sovereign credit ratings. The enhanced resilience of these economies contributes significantly to the stability of the broader global financial system. Following a period of stellar performance, questions are now emerging regarding the sustainability of the recent impressive growth trajectory in global emerging markets. While these economies have shown strong resilience against recent shocks, analysts are now weighing new challenges, including rising interest rates in developed economies which could trigger capital outflows. Concerns also persist over potential corrections in commodity prices and the ever-present geopolitical risks that can swiftly impact investor sentiment. Currency fluctuations and domestic policy uncertainties in some nations further contribute to this cautious outlook. Investors and policymakers are closely monitoring these factors to determine whether the robust expansion of recent years can continue. The future performance of these markets will largely depend on their ability to manage these complex internal and external pressures. Upcoming midterm elections in the United States are prompting significant discussion among investors and analysts about their potential impact on the stock market. Historically, midterm election years have often introduced periods of increased market volatility as investors anticipate potential shifts in congressional power and subsequent policy changes. A change in control of either the House or Senate could lead to legislative gridlock, affecting proposed policies on taxation, regulation, and federal spending, which directly influence corporate profitability. Political analysts are scrutinizing polling data and historical trends to forecast market reactions both before and immediately after Election Day. Understanding this interplay between political outcomes and economic performance is crucial for investors making strategic decisions in the months ahead. Europe is intensifying its efforts towards greater capital market integration, a strategic initiative aimed at boosting economic growth and resilience across the continent. The European Commission is pushing for enhanced cross-border investment opportunities, striving to deepen capital markets and improve access to finance for small and medium-sized enterprises. Proponents argue that a fully integrated capital market could add billions to the EU's GDP and create thousands of jobs by making it easier for businesses to raise capital and for investors to deploy it. However, significant challenges remain, including the harmonization of diverse national regulatory frameworks and overcoming deeply entrenched national market practices. This ambitious project is considered vital for strengthening Europe's economic competitiveness on the global stage and fostering innovation.